Hey everyone, it's Mike and welcome to lesson number 3 of the Order Flows Delta trading course on delta numbers. In this lesson, I'm going to teach you about the different delta numbers that you can see on the chart. But before we begin, a brief disclaimer: this presentation is for educational and informational purposes only, should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that could be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Alright, so when dealing in order flow delta, there are different delta numbers you can look at. There's the delta, which is the current delta reading for the bar. When the bar closes, it's the final delta for the bar. It's not going to change. You have the max delta, which is the most positive delta was in a bar. The min delta, the most negative delta was in a bar. Cumulative delta, the running delta for the session. Cumulative delta divided by volume. It's actually the total volume, not the volume for the bar. It's actually cumulative delta divided by cumulative volume, but it's just too much to write cumulative twice there. Cumulative delta is divided by the total volume for the session up to that point in time. So it's cumulative delta divided by the total volume for that session up until that point in time. Now, when looking at delta, the type of chart you look at will give you very different delta readings. So if you're looking at a minute-based chart and you compare it to, say a 4-range chart, the chart is completely different, right? It's going to give you different delta readings. So, I know some people like to look at, a 5-minute chart, a 15-minute chart, a 30-minute chart, and then take a trade on a 1-minute chart. You do that, you're going to have vastly different delta readings over time because, it's taking different things into account. Mainly what's being traded right now. If you're looking at a 30-minute chart, the first 15 minutes may have been very negative, but the last 15 minutes it can be completely different. It could be kind of neutral or very strong positive. And if you're looking, if you're one of these people like that, well, I need confirmation before I take a trade on a 1-minute chart, I need to make sure, the 15-minute chart or the 30-minute chart is going in the same direction. It could be completely opposite. So just bear that in mind. Range-based charts, I feel, give you a clearer reading on price movement than time-based charts because a new bar will only form when price is moving. If you're looking at a range-based chart, it could take 15 minutes for one bar to form. But if you're looking at a 1-minute chart over 15 minutes, you can get 15 different bars. So keep that in mind, when you're looking, if you're trading on a minute-based chart versus a range-based chart. So delta, what is delta? Sometimes I refer to it as the final delta. It's the headline number, basically. And the reason I refer to it as final delta is because once the bar closes, that number is not going to change. None of the numbers are going to change, but final delta means where the delta ended up when the bar closed. And it's basically the difference between aggressive buying and aggressive selling in the bar. Now, while the bar is forming, the delta number is going to be constantly changing because trading is occurring. The delta will go positive, it will go negative, and once the bar is closed, the delta, that's it. It's not going to change. Once the bar closes and it has a final delta of 367, that's it. It's not going to all of a sudden go back 5 minutes later and change the number to a negative number. If it closed at 367 when the bar closed, then that's it. It's not going to change. So with delta, you have to remember that the delta in a bar, while the bar is forming, it can change. And you got to be careful. Why I stress this point out is that it can change is because sometimes, as traders, we like to get the jump on other traders, right? We think, well, this bar, it's all negative delta. It's all, market's going to sell off. It's just all market's under pressure. So much aggressive selling. And then what happens? You get short. The bar is still trading, and then the market starts rallying, and the bar ends up with positive delta. If you should really wait for the bar to close when making a decision based on delta. So just bear that in mind. And so the delta, the final delta or delta, the headline number, is this number down here. It's the top number, delta. So once these bars close, that's it. It's not going to change ever again. And, the most current bar has got the delta, and it's not a final delta. The bar is still trading, and not until the bar closes that I would refer to it as final delta. And you can see here, on sideways markets, you have delta that just kinds of goes back and forth. As the market is, I'll say undecided, but it's found a level where people are happy to transact with each other. So some bars you got a little bit more selling, some bars a little bit more buying. But as the market starts to rally, you look for the aggressive buying lining up, right? Consecutive bars of positive delta. Very rarely will the market rally on all negative delta. So Another thing to bear in mind is sometimes, like here you have a delta of 9 in the middle here. It can happen. It can land on 0. Sometimes people say, well, it's 0 delta. What does that mean? It just means the bar closed. It's just a coincidence that it landed on 0. I don't put any extra strength in there. I don't say, well, it's a doji delta or anything like that. We opened and closed at 0. To me, that's just more coincidence. How I would look at a small delta number like 9 is I take it, the same way I take 0, which is neutral. So honestly, in most markets that put in strong delta numbers like E-minis, if it's anywhere 50 and below, either positive 50 or negative 50, I'd treat it as a neutral delta in the sense that it's directionless. Now delta is related to volume, okay, and you're not going to get generally a big delta number on a market with small volume. Now why is that important is because for markets that have an underlying cash market that a specific session like equities like S&Ps, right, or NASDAQ or Dow, when the cash market opens, the volume really picks up in trading. So for E-minis, prior to 8:30 Chicago time, volume is lighter, whereas after 8:30 volume is heavier, so you're going to generally get stronger overall volume numbers. Not necessarily every single number is going to be maddeningly strong. Like I think this one here is 8:30. So what is this? This is E-minis. This is an 8-range chart, and you can see here, volume it's a little bit lighter. This is a range-based chart, so you're getting some bars here with 1480s, 2794 in the middle of the night, 13,000, 10,000. But then once the cash session opens, you're seeing strong overall volume numbers: 23,000, 14,000, 34,000, 32,000, 17,000, 33. Whereas everything prior to 7:30 is 18,000 and less. Whereas after 8:30, you're getting stronger numbers. And as you can see, overall the delta numbers are stronger: 2,300, 6,000, 3,000. You do get some strong ones in here, 2,600, 1,900, but overall they're a shade lighter than you're seeing after the cash market opens up. And the other point to remember is opening and closing times. For markets that trade around the clock, there's the old floor hours, or cash open and cash close, and those times is you're going to get a big surge in volume around those times, and that also is going to affect delta numbers sometimes, in the sense that you all of a sudden you're trading 10,000 lots per bar. All of a sudden the cash close time period, for maybe a minute or two before, then during the cash close, and a minute or two afterwards, you're trading 3 times the volume. So sometimes you might see, wow, hey, look at this, normally we're getting 2,000 lots trading, in the delta one way or the other. All of a sudden I got 8,000. That must mean something. It just means it's the cash close. So don't necessarily read so much into it around those closing times. Just be aware of it, okay, when you're doing your analysis. So like, for example, right, we had some relatively small numbers, 953, 927 right on the cash open. So going into the cash open, it's kind of smallish delta numbers: 1955, 119. You had a couple bars with some heavier volume, heavier delta numbers: 1,000 and 1,100. Then back 400, 953. Then boom, once the cash opens, it's heavier volume: 28,000 per bar versus 2,000 on the earlier bars, and you're seeing average deltas of around 1,000 to 2,000, all the way up into the 3,000s here. Again, this is a 5-minute chart. This is wheat, right? So the time before the market reopens, right, it's trading, but you see the volume is just so much lighter. Over a 5-minute period, you're getting 90 contracts, 151, 480, 700. Then once the underlying opens up, you're seeing 3,000, 5,000, 3,000, and delta is just a lot stronger: 289, 179, 234, 179. 1179. This is where the market reopened, and you're just seeing a big number in delta and a big number in volume relative to what was trading before. So just be aware of those times. This is what I'm trying to say about that. So max delta, what max delta is, right, on the delta number. So you got delta, max delta, min delta to look at. So max delta is the strongest delta was on the positive sides, and what that means is how strong aggressive buying was at one point in the bar. Now a final delta value that is close to the max delta indicates aggressive buyers basically dominated the bar, especially if you got a small min value number. All right, so max delta is usually going to be the second line. On my software, it is the second line after I clean it up on what numbers I want to look at. So you'll see here, like in the middle bar, this bar here where you got the swing low with the ratio of 158.8, max delta is 222. So it's telling me at one point there was 222 aggressive buyers overall in the bar. Okay, the final delta, the delta for the bar finished at 197. So it's telling me when I start to read that is, okay, at one point the delta was so strong you had 222 net aggressive buyers, and we finished the bar at 197 in terms of delta, positive 197. So buyers controlled the bar in the second half of the session. Earlier, the min delta, which is the opposite of max delta, I'll explain that in a second. Once I explain it, it'll make a lot more sense. But this bar went from a negative delta of 329 to a max delta of 222, and we closed near the max delta of 197. So I know that this bar closed with strong aggressive buying. When you see a bar closing near its max delta number, it's telling you that buyers really took control of that bar, especially if you're looking at a range-based chart. This happens to be a minute-based chart. But if you're looking at a range-based chart and you're seeing a lot of delta numbers when the bar closes near the max delta, it's telling you this market's moving with strong aggressive buying. So this is an 8 range chart, and as you can see here, this is exactly what I'm talking about. So here you got this bar, 2368 is the delta, max delta is 2371, next bar 2827 is the delta, max delta 2827. The next bar 6280 is the delta, max delta 6280. So these 3 bars, basically you closed right on your max delta number on 2 of the bars, and the 1 bar you close within 3 contracts of it. So it's just aggressive buying dominating this market at this time, and the market is that's sign of very strong aggressive buying. When you see signs of very strong aggressive buying, the market's going to be going up, right? The market's not going to be going down when it's dominated by strong aggressive buyers. And what I like about max delta is when over a few bars the delta finishes near the max delta and the min delta is relatively small, like this, 0, 0, that's your min delta. It's basically telling me that strong aggressive buying is occurring in the market, and the strength often builds on itself and the markets tend to rise. What's happening is people are saying, people are watching, these algos, these machines out there are seeing that, oh my God, all these offers are being lifted. And then it just sort of manifests and feeds on itself, and the market goes higher. You can see it here, right? You see these 0, 0, 0, 0 as this market is rallying. We're closing generally up near our max delta. This bar, this bar, this bar, this bar, this bar. Right? It's just indicative of a very strong market, and you can see it happening early in here. So you could catch this move 2806 all the way up to 2812 in the S&Ps. Watch it as it's being strung along. You can see here, again, this chart looks a lot like this chart, but it's not. It's not the same chart. It's a different chart. And once you understand what to look for, you start seeing these things occurring over and over and over again, and literally sometimes you think you're looking at the same chart. And this is even in the middle of the night. This is E-minis. This is around midnight going into 5 in the morning. Not a whole heck of a lot going on, but from midnight until 5 in the morning, this market's just been dominated on the buy side, right? People, much more aggressive buying than aggressive selling going on. Now, min delta is the opposite of max delta. Min delta is the strongest delta was in the negative side of the bar, and basically the negative sense, meaning how strong aggressive sellers were in the bar. A close near the min delta number indicates aggressive sellers dominated the bar. So, min delta was, you'll see it on this chart, min delta it's going to be always red unless it settles at 0, then it'll be green. It'll never be positive. And it tells you how negative it was at any point in the bar. So like, let's take it here in the middle, minus 32. Okay, it just tells you that in this bar, the most negative delta was only 32 contracts. The next bar, most negative delta was minus 26 contracts, negative 26. This bar, negative 933. Okay, now you can see earlier on this big sell-off, these bars are dominated by aggressive selling. Negative 1920 was 0 max delta. The min delta is minus 1920. Next bar, min delta is minus 6153. Final delta is minus 6053. Max delta is 0. The next bar, min delta minus 5284. Max delta 112. Minus 5275 is the min delta. Or sorry, the final delta. And again, next bar 2737, which is the final delta, and that's what your min delta was. So, you know, as this market is just getting slammed, it's just all aggressive selling for the most part, and strong numbers, 6,000, 5,000, as the market starts selling off. Okay, so now here's, you know, the min delta. As you can see, you know, it's negative. Now, sometimes, you know, people get transfixed on looking on min deltas, and this is sort of a thing you'll pick up over time. Is I don't like to necessarily compare the max delta to the min delta. I'd rather look at the final delta. But as you're comparing the max delta and the min delta, look at this move up. Okay, compare the max delta to the min deltas. It's a lot less. You know, the min deltas are very small early on. You know, here it's 98 versus 449. It's minus 157 minus 213 against 213. 0 against 777. Minus 212 versus 283. 593 against 72. You know, these two bars are sort of the aberration. But then again here, you know, minus 147 versus 1400. Minus 500 versus 1600. Minus 300. So these bars, even though, you know, there is some selling, you know, this market is just grinding its way higher slowly. There's not a lot of strong negative deltas except for this one bar right here, minus 563, and even to a lesser extent the following bar. But everywhere else it's just obviously controlled by the buyers, right? The bars finished positive delta, and the min deltas weren't that strong. Now that's something that, you know, is a little bit more advanced in theory and concept, but you should, you know, by now hopefully be picking this up on comparing the max delta and the min delta. It's not necessarily the max delta minus the min delta comes to the final delta. No, that's not how it's calculated. It's telling you how strong it was, either in a positive sense in the max delta or how strong it was in a negative sense in the min delta. Now, you know, again, in a downtrend, you're going to see the final delta basically ending up near where the min delta was, and as he's starting to come off, you can see here, you know, here we're sort of going a little sideways. This is where the big push lower is. You know, minus 283 versus minus 363, minus 3110 versus 2976, minus 2269 against 2171, minus 3509 versus minus 3493, minus 4000 versus minus 2000. But you can see how it's just dominating. You know, sellers, again, compare the min delta versus the max delta, and you can see, you know, you're talking in some cases it's 10-to-1 ratio. Now again, you know, what I like about min delta is the same thing that I like about max delta, is when you start stringing bars together where the delta finishes near the min delta. I think it's a great short opportunity. You know, that's what I call stringing them along, you know, with the zeros, like here. 2593 versus 2593 and a 0 max delta. 2443 versus 1400. 2093 versus 2089. 1129 versus 1128. So, you know, if you're not picking it up earlier on in the bar, 1769 versus 1764. 2411 versus 2357. Say you miss the strong selling up in here earlier and you're just going sideways, I think it's still a good trade to be looking to get short and catch the rest of the move down. Okay, again, similar thing over here. You know, off this high, this is your high, you got a divergence up here. And then what do you get up here? Look at this, minus 4377 versus 4389, minus 3502 versus 3509, 2305 versus 2306. Look at these max deltas, tiny, 30, 0, 0. There was never any max delta in there. And then, you know, the market pauses and then gets that push lower. You know, I'd be more apt to trade it from the short side unless there was something very strong in here. And right now there's nothing very strong showing in there. Now there are different ways to analyze the max and min delta that give a trade and insight into the market that's not visible anywhere else. It's going to help you see shifts in supply and demand. So how can you see shifts in supply and demand? Well, there's going to be all bars that have a large max delta value and a large min delta value, then closes near one or the other. For example, a market has a min value of minus 1766 and a max delta of 2359 and a final delta of 2359. Which way do you think the market's going to go, higher or lower? Well, it's going to go higher, of course. You know, for example, right here, down in here, 2359 is the final delta. The max delta is 2359. Min delta was 1766. So what's happened earlier in this bar? Strong selling. You have negative delta 1766. It finished at 2359, positive 2359. So not only did it go from minus 1766 to 0, which is recovering back 1766, it added an additional 2359 net aggressive buyers. And what happens is the market rallies off that. Okay, max delta to a min delta. All right, you're seeing it right up here at this high. You know, this is what you're going to be looking for at inflection points, right? Positive delta 805. Where we finish? Minus 635, or min delta was minus 637. Next couple of bars, negative deltas. You know, you're seeing the follow through usually in the next couple of bars. It's not something where you can always, you know, take the trade and then just hold it forever, you know, until infinity. No, you're looking for the move over the next several bars. You know, over here you got something similar. You had negative delta of 1031. The bar finished with a positive delta of 919, which is just right off the max delta of 963. And look over the next couple bars. You know, you're talking a move from 28.95 all the way up to, you know, 28.99. You know, it's a quick 4-point move over the next 2 bars, 3 bars. Now, cumulative delta is the running delta for the entire trading session. It takes the delta for each bars and adds or subtracts them from the total. So you can see here, if you added it on, you know, I don't usually use it, but what you're looking for, see positive delta, cumulative delta is positive, then it turns negative, and it's negative for the rest of this chart. And you know, right in here is the middle where it turned negative, and people think, well, you know, hey, we just turned from positive to negative. But you could, you know, you could go positive, negative over the next, you know, 10 bars. It can change 4 or 5 times. It's like a basketball game, right? That's tied. You know, something, the lead keeps changing back and forth. You know, here's one where it's just positive the whole session, basically all the way up till the close. And one of the reasons why I'm not a big follower of cumulative delta is because I find it could be a lagging indicator. Because, you know, imagine if a market spends hours or spends the entire evening session with bars, putting together bars after bars of positive delta. It's going to give you a positive cumulative delta, and it's going to take a lot of bars to turn the cumulative delta negative. It's not something that can change really quick. And, you know, for example, in this case, right, you see it's positive, 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 then it turns negative. Cumulative delta is all positive, but then it keeps growing. Minus 1700, minus 7000, minus 9800, minus 1300, minus 136, minus 136, minus 146. It's just growing, and it's just sort of hovering around here. Now notice the deltas. Okay, it's like 1800, 2000. So now you're staring at minus 17,000 in delta. Well, it's not going to change anytime soon. It's going to take a lot of bars. You know, if you're averaging 1,000 to 2,000 a bar, it's going to take you to get this positive. You know, you're going to go, you know, you got to get like 12 bars basically that are stronger than the negative delta to turn it positive. And you know, it's some markets, it's just not going to do it because there's just not enough volume to trade that before the end of the session. So, you know, there's traders that say, well, trade in the direction of the cumulative delta, and I find that a bad advice. And the reason being is, okay, well, now we're negative delta, so you got to trade it from the short side. Well, you're never going to be taking any buys because it's all negative delta, right? And I just think it's a poor trading advice. You know, if you're trading, you know, for example, a 1-minute E-mini chart, and you know, you get delta, cumulative delta is positive 32,000, you get a short signal, you're not going to take the short trade. You're going to miss out a lot of otherwise great trades. You know, on a minute-based charts where you get deltas per bar in the hundreds, it's going to take a lot of negative delta bars to turn it negative delta positive. For example, this is a 1 minute E-mini chart, right? Cumulative delta is negative 30,000. You're only getting a couple hundred delta positive or negative. So it's probably not going to go positive after a certain point, or sorry, it's not going to go negative after a certain point because it's already strong positive that's been accumulating all session up to this point. Up to noon, you're at plus 30,000. You're probably not going to get you're not going to get that over, the rest of the session. It's not going to go negative on you because, you're averaging, 1 or 200 contracts per bar of delta, positive or negative, and it's just the math is not on your side. It's just not going to happen. So, that's the main issue that I have with cumulative delta. It's a bit of a lagging thing in that sense. And, as time goes on, it's just not going to change. It's impossible. The math is just not there. Now, cumulative delta versus cumulative volume is basically the cumulative delta divided by the total volume for the session at that point. Now, when the ratio is close to 0, it's indicative of a small cumulative delta. The thing is, total volume will always be growing, while cumulative delta is basically going to expand or contract, right? The total volume for the day is always going to get larger. Cumulative volume could get larger or could get smaller. It could get closer to 0 or get further away from 0. So they're sort of moving in different, not directions, because the direction of total volume is always in one direction. It's never going to get less total. You're not going to get less total volume, but cumulative delta can get lesser. Now, what I look for is areas where cumulative delta divided by cumulative volume is close to 0, basically almost at 0, 0.000. Then look for a trade in the direction if there's strong delta that follows. Now, it's kind of an area of absorption and consolidation. Traders are nearly equal for the session. I'm just waiting to see the direction of the market. Honestly, I'm not a big fan of cumulative delta versus volume because, in a lot of markets, you're going to get numbers that are kind of useless to you, honestly. It's like 0.011, 0.013, 0.019. And, there's nothing you can really do with that, honestly. Maybe somebody's got a secret that I've just all these years have never missed. But I also look for areas where it's quite high in an absolute sense, a ratio above 0.050 is what I consider high. So it could be negative 0.050 or positive 0.050. And it just tells me that there's underlying strength in that market. You can see here it's 0.50 right down here in the middle as we're going up. So it just tells me, we're under a head of steam, so to speak. Volume is obviously going higher, but more importantly, cumulative delta is also going higher. Same would be true if it was a negative, but a negative cumulative delta and the cumulative delta divided by total volume. Say this was negative 0.050, I would treat it the same as going down. So, a lot of times cumulative delta divided by volume is so small that it's useless. And again, I touched on that. Like these numbers, this means nothing. Let's say it doesn't mean nothing. Rather, it's got no use to me as a trader. And really what I'd be looking for, like here is, you can see early up here, it's 0.00, which just tells me cumulative volume is small. Volume isn't going to change, but cumulative delta can change. So it's minus 42 at this point. So really what I'd be looking at is areas where maybe I get into a 0, then I'd just be watching because I know that over the next couple bars, if it's strong negative, that's the direction I would trade in. But if it's like 0.007 or 0.005, to me that's just average numbers, nothing special that I expect out of it. As you get closer to 0, or at 0 rather, showing up, then I would treat it very different. So the problem that I have with another problem I have with cumulative delta divided by the total volume is over time it's going to flatten, and as the day goes on, changes are minor. And what that means is it's going to be difficult to see any changes having an effect on the market, because as the day goes on, like I said, total volume is going to be increasing. It's never going to decrease, whereas the cumulative delta can get bigger or it could get smaller. Okay, and like I said, you can't subtract volume once it's traded, but cumulative delta can get bigger or smaller. So as you can see here, this is what euro currency, 160,000 contracts have traded already. This is 9 in the morning. Cumulative delta is kind of steady, minus 2,800, 3,800, 3,500. We're not putting in big delta numbers. 400 is big already, but you're getting a lot of hundreds. So, the rest of the session, this is even a 5-minute chart. Imagine if it's a 5-minute chart, you're getting 30 contracts, 65 contracts, 40 contracts in the delta. It's going to take a lot of positive delta to turn this negative delta into positive. I'm not sure it can do that. And so you can see the cumulative delta divided by volume is pretty steady, minus 0.021, minus 0.022, minus 0.024, 24, 24, 23, 23, 24, 25, 26, 25, 26, 25, 25, 25. It's just not going anywhere. And that's, one of the problems. It might get up to minus 0.30, 0.030, 31, 32, and then back down into the 25s and then even maybe the teens. So it's not going to give you much to go with. No, I admit, I don't pay too much attention to the cumulative delta versus volume ratio. I just find there's too much other useful information out there in forms of delta that I can look at and make a decision at. For cumulative delta divided by volume, I may get 1 or 2 opportunities a day, if that. And honestly, I'd rather spend my time looking at other things that are going to give me more, I think, more accurate, I won't say better, but more easily definable trading opportunities. So by now you should understand the different types of delta numbers available for your analysis. More importantly, you should understand what they mean and how to use them. So that's the end of this lesson 3. In lesson 4, it's going to be a long lesson. I'm going to explain the order flow delta setups so you can start looking for them yourself. Now again, if you haven't printed up these PDFs, please do. The lesson 4 is very important because you should write down what I'm talking about so you can understand it better rather than just watch the video and follow along on the PDF. It's always better to take notes so that you can start to understand it. Writing stuff down really helps you learn something. So thanks, and I'll see you on the next lesson. Bye-bye.